righty, everybody. I'm about a minute early, but it's okay. It's because I want to ramble a little bit. Um, I saw this quote. One of the books I've been reading is a book called "Taking Care of Business" by Lee Jenkins. Lee Jenkins. You can go and search that on your own. Taking care of business. In that, he talks about the the necessity of us seeking to be wealthy, especially in the African American community. And I wanted to read this quote. He said, "Poverty is never corrected by a redistribution of wealth, but by a transformation of people." I thought that was very, very profound. Like I can get, we can, all of us in here can be given $1 million, but who we are on the inside and what knowledge we have and our character and our integrity and things of that nature and how we are convicted will determine where we'll be in the next 5 years after having that money. So I just, hopefully what this has done over the past couple of days was to help you transform your thinking in some areas and giving you some tools for that transformation. Bishop Jake said this, and I thought it was a great quote when I heard it. As we talk about this is legacy building, he said, legacy is not what you leave to a generation, but what you leave in them. So hopefully for us, over the next, we take the information we've learned the past 3 days, and it's been something deposited in us, which prompts then a certain action and behavior and habit. So this has been good. How many of you have been enjoying this? It's been good. Yes. Awesome. Awesome. So I need 3 volunteers real quickly. Give me in 30 seconds or less some takeaways over the past couple of days. All right. Anybody want to start off? All right. What are some of your takeaways? Go ahead.
For me, as far as
No, you good. You good.
okay, as far as the tax,
Hmm.
there was a lot of things brought out in tax preparation for us that we didn't know that we can start using more so. So that was an eye opener for us, and also hope it'll help us. It'll help us in that as well. So that was one thing that really stood out for me.
Praise God. You went 29 seconds. You almost something at that. No, I'm just joking. I know Pastor Jay and I were arguing yesterday about who was going to take Mama to the doctor next time. I said, no, I'm taking her to the doctor this week. I'm gonna get that medical mileage. So that was good. 2 more people. Yes, ma'am.
I will also say the tax, because with me being self-employed, self-employed for so long, she named off a whole lot of things that I did not write off. Even my glasses.
Right.
Coming to church, I need that.
We need more volunteers. When she said that, I said we might even use that to get more volunteers. You know you can write this off when you take it.
Everything was so beneficial. And I'm
That's
sure it will be still.
That's awesome. Awesome. One more person.
Just to see how many professionals you have in house. Man, without really talking to people, you don't know what they do.
Yeah.
But being able to have this and now, and they're gonna do you right.
Yeah.
So
That was good. It's been good for me too. You all, every Sunday we walk out, we don't even know, man. Man, I sit beside that sister every Sunday. That's a bad sister. I sit beside her every week. And so it's good to know all of that. All right, everyone. So we're going to press on today. We've covered a full gamut of financial literacy over the past couple of days. And so the average person, the average family has no idea about investing or even how to get into it. We hear it so much. We hear about investing multiple streams, and we hear about you want to be the investor or self-employed or the employer and all of that. So today, as I mentioned to you yesterday, my wife's brother is here, and for as long as I remembered, he's always been investing. And so I like to put people in front of you that, this is either their business or they're doing it. And so he's going to come and talk to us about investing. So y'all help me welcome Mr. Sean Harlan.
It was only like 4 people here when I first walked in. Now it's a lot bigger. Get myself ready. As you guys know, I am the brother-in-law of Chris Johnson, brother to Toya. Good to be here. Wanted to say greetings to you guys. This is a little bit different for me. I'm more the analytical side of the family. Toya and Chris are the social ones, so this is new. Bear with me. I will say, I'm going to steal this from you real quick. Did you warn them about the visitor? Okay, so I might say something here that I don't mean any harm. All right. So they asked me to come in and talk about investing, what I did to start, and what I'm doing now. So let me give you a little bit of background on how I got started in it. So about 12, 13 years ago, I was living in New York, Queens. I had an apartment, actually a house, that I was paying just to live in the house without gas, without car, without food, was $2,600 a month, just to live in the place. So the job that I was at informed me that I should take my talents elsewhere, which is a nice way of saying they fired me. And so I took some time, went to the Dominican Republic, came back, thought I was just gonna grab a quick job real quick and get started. Didn't work that way. Burned through everything. I mean, I had $0. It was at this point where, and Chris can attest to this, I was at a point where it was do or die. I was either gonna have to move back home, put my name on the orange juice, and live in the basement of my parents' house, or figure out something else to do. So I ended up getting the job that I currently have right now, and I vowed at that point, and that point then, I was never ever gonna allow myself to be broke or allow somebody else to dictate what I was gonna do with my life. So at that point I said, okay, I have to start learning. I've gotta figure out what investing is, how to be financially free. So before I jump into what I wanna talk about, let me kind of go to the end and I'll come back. So currently, I have a stock account that's grown by at least a good amount that's almost matching my 401k that I built on my own. My 401k, I've been there for 12 years. It's pretty good at this point. And then I own 7 houses. And I've done that all within a span of about 7 years. And I did that on purpose. So I wanna make sure that we keep this in mind that you can do all these things if you just focus on it on purpose. So how did I do it? I had to start learning. So the very first thing before I got into it was I had to realize every one of us right now, yesterday, 2 weeks ago, a month ago, are investors. This is the part where I start getting nervous about what I'm about to say, because you are investing in everything. Everybody right now has invested this hour and a half in learning how to grow. When you're at home, for those, and again, not to offend anybody, but if you're at home watching Maury, if you're at home watching Housewives of whatever, you have chose to invest in that. You have to consciously figure out what it is that you want to invest in. At home, I'm sitting with Victoria and I'm saying to myself, or she'll say, hey, let's watch a movie. Sure. She'll put the movie on and she'll tell you, I have an earpiece in. She's watching a movie, I'm half watching it, but I've got something playing in my ear at the same time, to where at the end of the movie, what'd you think? That was good. And I just move on. Like, I can tell you one person in that movie. I can't tell you a name of anybody, but I'm trying. So the one thing that I would say is you have to visualize your target, right? Pick a target, visualize it. If you pray about it every day, if you write it down, some people have vision boards, if they want to do vision boards. I'm a visual person, but I don't have a vision board. but I talk it to myself every day, every single day. I know right now my net worth needs to be $2.4 million. And why $2.4 million? Because if I hit $2.4 million for 20 years, I have a monthly income of $10,000 a month. I know that in my head. And so I know that that's the goal, right? So you have to have some type of target in that sense to make sure that you know where you're going in life. Number two is, what am I gonna get into? What's the financial vehicles that are available and accessible to me? There's tons of vehicles out there. I'm gonna also start off by saying I am not a licensed professional. So I'm telling you what I did for myself. As you're getting into those, find a licensed professional and then have them help you guide yourself. You know, don't take advice from everybody, because there's a lot of people out there that will steer you in the direction to help them and not you. So find out what's best for you and do that. Okay. Tons of vehicles that you can use for investing. There's stocks. You guys all know stocks, but in case you don't, stocks is buying a piece of a company. You are giving company A a bit of your money to grow as they grow. So if they go up in their stock value, you get that percentage of increase within your stock. Now there's many layers to stocks, and trust me, I've tried them all. Buy and hold is the only thing that I'm gonna stick with. I've lost a ton of money trying to be a day trader. Doesn't work for me. Some people it works for. I'm not saying don't try it, but I had a day job trying to flip stocks at the same time, didn't work. Options. Don't know a lot about options. I lost a ton of money in options. But I have friends who made a lot of money, and that's what they do. I'm a buy and hold stock person. I will buy Google, I will buy Amazon, I will buy Netflix. The things that you know everybody buys, the blue chip stocks, GE, Johnson & Johnson, I stick with those because at worst case scenario, they're gonna stick and hold. Now there's commodities too. Commodities are really strong, they just don't give you a big return. Some stocks you can go for the big boom, right? Like NVIDIA is what everybody's talking about right now. You can buy NVIDIA and hope that that goes up, and it probably will. I bought Facebook, in case you guys wanna look at it, it's now Meta. I bought Facebook at $17 a share. You guys can go look at where it's at now. If you get in early, it's a great investment. And the more you can pour into it, do it. There's bonds, that's when you give, interest, or you get interest payments. You give the government, let's say $1,000, they pay you an interest rate over 2 or 3 years, and then at the end of the 2 or 3 years, they give you that $1,000 back. So you can make some money doing that way. Mutual funds, ETFs, that's a group of stocks. So if you buy a mutual fund or an ETF, what you're basically saying is, okay, let's say Chris has a portfolio of 10 stocks. You're not gonna pick one stock. You're gonna take his whole average of those 10 stocks and you're buying into that average. And that's what an ETF or a mutual fund is. So you're grabbing those. I'm doing very basic definitions here. Real estate. I'll come back to real estate. Savings accounts, banking accounts. Again, I apologize if anybody is in here as a banker or own a bank or anything. My personal opinion is the bank is probably the worst place to put your money. And let me tell you why. Inflation. So if you go to a bank and you put your money in a savings account or a checking account, you guys probably know, what is it, 0.2% interest rate, at best 1. Inflation goes up on an average 3%. You've lost money every single year that your money's been in a bank account. So you gotta keep that in mind. Inflation definitely needs to be factored in when you're doing investing. If you put all your money in a bank, which is what I learned, Chris and I talked about this all the time. The reason why I wanted to come and talk, and again, I don't really talk in public like that, but the reason why I wanted to is growing up, we never had this. I was hoping there'd be a lot of younger people here too, because if I knew then what I know now, we'd be having this conversation in Nice. We'd be living good, so again, savings account. And 401k is another one. If you have, hey Toya, sorry, I didn't see it. 401k, if you have a company that does a 401k match, find out exactly what the max is for that and max that out. That's free money. Take that money, then whatever you have left, put it in your own, work your own accounts. It's the best way to do it, because if they're gonna match it, if you have a job that gives you 100% match to your 401k, let me know, because I need to transfer to your place. I mean, I haven't seen that in a long time. So, but if you have that, take full advantage of that. And then the last thing is businesses. You can invest in a business and try and grow a business, whether it's your own or you're jumping into somebody else's. Real estate. So I've been doing real estate for a while now. It started off flipping, actually, I started off with peer-to-peer loans, really. So what I would do is get creative. I didn't have enough money to buy a house. So what I would do is talk to people and say, I know you wanted to sell your house. You know you're not gonna get full value unless you do the renovations. So I've got 10,000. I'm gonna give you 10,000 to do the renovations on your house. You sell your house, you give me back 11. That's how I would get started. So I would just peer-to-peer lend with people. And then I got to enough money where I could buy my first house. Bought the first house. Then I didn't have any more money. So I got creative then. If you have people that you trust and you wanna build businesses with, what I did is I paired up with another couple. And what we said was, we're gonna go half on a house. We bought a $280,000 house. And in case you guys don't know, unless you live in the house, you cannot get the premier down payment. So if you live in a house, you can get a 3% down payment. If you can get a 10% down payment if you're living in there. If you're investing, it's 25%. Banks don't give you a 3% down payment on an investment house. And if you find one, let me know, because I've been to every bank. They don't do it. So you have to put 25% down. So what we did is we just paired up. So less risk for me, because if something goes wrong, I only lost half of the money that I would have put in. And we did that for about 2 more houses. Then I just bought another house, and we were flipping in the meantime on that. Flips are great if you find the right opportunity. And you find, I only did cosmetic flips. So what that means is, you get in the house, you redo the flooring, you paint it, you might cut the yard or put some plants down, and then you go back and resell it. Those are the easy flips. Now, some people get into really detailed, deep dives on flips and tear walls down. We did tear a couple of walls down, right? We tore a couple of walls down. So we did a couple of things there, but I didn't really get too deep into it. Now, there's a ton of other things that you can do in real estate. I just want you guys to be aware that you can get into some holes in real estate. I know, I actually watched a couple of videos, and I think it was Rojan who asked this question about how do you find off-the-market houses? Was that you that asked that? There's a ton of people who do this. It's called wholesaling. And wholesaling is great in 2019. It is flooded right now. And what's happening is companies have actually come in, like businesses have come in, and they yank all all the houses up that they can get, because they can buy them all. And same thing with duplexes. I am a duplex fan. They go and buy duplexes left and right now, because they've got the money to do it, and they can outbid you all day. So you've got to find the right ones. My suggestion to everybody is find people that you trust. When you're in real estate, it's hard. It's hard because you got to find the right real estate agent. We went through a few. I have a beast right now. She's a beast. So I have my real estate agent. General contractors. General contractors are hard to find, and most of them will start, they'll mess it up, they come back, you gotta find another one. You have to be very on top of people when you're doing this. This is your money. So you've gotta sit on top of them. You can't just rely on people to do things. I will say, I heard there's a couple of real estate agents here in the church. I would talk to them, see how they can help you. But that's how you would grow that business in real estate. It's really not hard. I would say the next thing, so number one, I would say is you're always investing in something all the time, every day. Keep that in. Number two, make sure that you find people that you trust and that you can work with, because they're actually gonna help you grow your business. So if you don't have that, it's gonna be really hard to grow. I don't know if anybody, well, we have 14 minutes. Does anybody have any questions? Kind of want to make this an open, if anybody has any questions on real estate, how we get started, what we did within it.
I've got a question about the stocks. What do you, like if you were brand new and, I know there's all these different websites and apps, what would you recommend? Like, I know Robinhood was one, just something basic that you can get started, and how much should you expect to need to get started? Should you get started with $100 or?
Yeah, you can definitely get started with almost any amount. Like, I mean, there's stocks for $2. There's stocks for $1,000. You can get started anywhere. Again, this is where my bias might come in. I stay away from free anything. So Robinhood scares me. And the reason why is if they're giving it to you for free, you are the product. So what they do is they take your information and what you buy, and they sell that to the Charles Schwabs, the TD Banks, to find out what your patterns are, and then they market to you. So you're the product with Robinhood. I stay away from Robinhood, but I know people love them. Acorn is another one. I stay away from those, but if that's how you want to get started, and it's fine. I think getting started in investing is the most important part to everything. Any other questions? Well, we have some young,
What are your thoughts and experience as it relates to cryptocurrency and investing in crypto?
So this is the one thing that I try to make sure that and I talked about it before, was start learning and start getting it. I started to learn about cryptocurrency. When I realized that it was way too complicated for me to understand, I dabbled in, I have some crypto. But when you're telling me there's a little man that made these coins and he disappeared and he only made a certain amount and you can't find him and he's gonna bring them back it's too complicated for me. Now again, some people make I have friends who made a lot of money in Bitcoin, and I do have Ethereum. I have started growing in Ethereum, but I couldn't give you advice on that because I didn't do the research on it, and I would feel bad even saying much more than that on cryptocurrency.
What's a good startup book or Audible?
Great question, and I can run through this for a while. So one, if you're interested in real estate, I wouldn't touch a real estate deal until you've read Rich Dad Poor Dad. I would not move forward in anything until you've read that. Number two, The Millionaire Next Door is a great, so there's a ton of people. I'm pretty sure there's like 4 or 5 in this, maybe even more in this room, easily could be millionaires sitting in front of you. If they read The Millionaire, you don't know a millionaire by looks. I mean, you can almost kind of find the fake millionaires, right? If they're all poloed out and decked out, and they could be millionaires. Or they could be, they got that money quick, like that's that football money, basketball money, because they don't, Chris's quote in the beginning was actually very fitting to this. You can win the lottery today. If you don't know how to manage money, you'll be broke soon. It's gonna happen. How many football players have you heard? There's a whole 30 for 30 on it, on football players that ended up broke. Lottery winners, 90-something% of lottery winners end up broke. Like you've gotta educate yourself on how to handle money before you can really have and keep money. Millionaire Next Door, I'm a big fan on Think and Grow Rich. Now, some people might say yes, some people might say no. Think and Grow Rich, if you want, I can give you summaries of all of these as many times as I've read them. Think and Grow Rich is prayer. That's what it is. If you pray about it over and over again, it's stuck in your mind. That's what Think and Grow Rich is. See it, pray about it, get it. That's basically that. Rich Dad, Poor Dad, buy assets, don't buy expenses. You buy a car, most people think buying a house is an asset. It isn't, unless you sell it. Buying a car is not an asset. It's a liability, unless you sell it. And even if you sell it for a loss. You've got to think about what's actually giving you money back. And Rich Dad Poor Dad breaks that down for you. The Millionaire Next Door is managing your finances. This isn't good for me, but I'll say it. It's like managing your weight, right? Like, it's, as long as you're bringing in more money than you're getting out, you'll get rich. Take in more money than you give out. You're rich. That's the Millionaire Next Door. Trying to think if there's any others.
So as far as like investing,
Oh, investing in stocks. I don't know if I read an actual book on investing in stocks. I think what I did on that is I YouTubed a lot of stuff, and I learned how to read. You don't really necessarily have to know how to read a financial portfolio. You don't really need to know that, but what I would do is go to Yahoo Finance. I would read about the company and then find out if it's something that I believe people would buy. Or actually, you can take it a step further. What would you buy? And what are your friends and family buying? Everybody has Facebook, Meta. Everybody has Instagram. You buy Meta. Everybody has it. At the time before COVID, there was a whole bunch of dating apps. So I bought IAC, which then split and did Match. So Match became its own entity, and IAC was the parenting company. But everybody was on dating apps, so I bought that because it was COVID, and how else are you going to meet somebody? So that's what I did, and I bought into those. Just understanding the market, understanding what's going on. And then I would keep in on stocks, and I know I only have like 8 minutes in case there's other questions, but watch the growth of the stock, right? Like if that stock is going down, it's a write-off, by the way. If you cut the stock, like let's say you lost 10% on that stock this year and you get rid of that stock, that loss is actually a write-off, and it can actually offset some of the gains that you made that year. So you want to look at when to keep the stock and when to drop it. But you'll see on an average, the stock, the S&P, the NASDAQ, on an average is about a 7% increase year over year. So if you had that in a bank, you would only made 0.3%. If you put that money in the stock market, even if you just bought the NASDAQ, that's probably the easiest stock to get into. Just buy the whole thing and then get your 7% and move forward and just keep moving on throughout the years and just keep feeding it. The more you feed it, for the younger folks in here, I was just telling them before you guys came in, if I knew then, at your age, what I knew now, we'd be having this conversation in the Bahamas somewhere, right? Like it'd go well. You guys are young, I get it. Sometimes you haven't had your fun yet and you haven't partied it out, or you haven't, got a house or doing all that type of stuff. But if you can discipline yourself to set aside a little bit of money to put into stocks, all I'm asking, it's some old man sitting up here talking to y'all. You don't have to listen to me, but I get it. The one or two that do, if you put a little bit of money aside and watch the compounding of money, you'll see it. Just type that into YouTube sometime, the compound of money, and what happens if you're 20 years old and you put in $100 a month, what that turns out to be. I'll type it up in a second and I'll tell you. But $100 a month at 20 years old, when you get to be 40, 45, none of your friends are going to be in the same category, I promise you. But it's the discipline then. If I'd have known that then, I didn't have $100 then, but I would have. I would have. Any other questions? I don't. So my nephew actually came to me on Forex, and foreign exchange is tough. Currency is tough, right? Like it's about speed. And I don't know, like you've got to be on it. If you've got a job, like a lot of that is really, you have to have a machine that does it for you, which, I mean, Bloomberg pays millions of dollars to make these things happen. So the average person jumping in there and doing it, it just rings to me as difficult. So I manage a couple of things. I manage the fact that I have to have a job. I work a full-time job. I manage risk, and I manage time. Forex seems like a lot of time for me, so I didn't dive into that. So I don't know much about it. Any other questions?
You said you go on Facebook, but it was at what?
Yeah.
Say it out loud. $453.41.
Yeah. I'm doing pretty well on that. So before I go, I got 4 minutes, so I'm going to do this really quick. Hopefully this doesn't make a real loud sound. Hopefully Sade doesn't pop up on here. Can I turn this off from here? I don't want to make it. So I just really, I'm going to do it real quick. Okay, let me see if I have this here. So remember when I was talking about putting in $100 a month for each month for 20 years? That $100 a month each month for 20 years, by the time that 20 years is up, you've made $50,000. That's $100 a month each month. As you get older, you're gonna put in more money. That's $50,000 from $100 a month. Now, you guys are smart enough to do the math on that. What if it's 200? What if it's 300? Right? And as you get older, you'll be able to put more and more in. That's on an average of a 7% interest rate. Now, you put it in and it's Facebook, it's a whole different game. But you're gonna make money in investing. The other thing is you take that $50,000, let's say you're 20, you're turning 40, you got $50,000, you drop that into a house. I got 2 minutes, so I just wanna dive into a quick thing on real estate. There's two different things on real estate that I would say you really have to look out for. If you watch YouTube videos, if you listen to ads and everything, it's all about cash flow. You know, cash flow, cash flow, cash flow. It's tough out there right now on cash flow. And the reason being is interest rates are high. It's not a great time to buy a house right now. 7% is ridiculous. And I was driving here and somebody said 5% is where it's at right now. So, okay, still ridiculous. I bought a house with 0% or 3%, like I was in that range. What you really wanna do is equity. So you buy a house, you put $50,000 down on your house. Let's say it's a $300,000, let me do easy math so I can do it easy. It's a $400,000 house, you put $100,000 down to get that house. You have somebody else in there, that's why you really wanna buy a duplex. You have two people in there that are paying down that mortgage of that house. You hire a property manager, you gotta pay them 10% a month, but I'm perfectly fine with that because you're not calling me at 2 o'clock in the morning telling me your toilet blew up. I don't care. So the property manager is gonna handle that for you. And so you're making your money on the equity of the house. Now, on top of that, the equity of the house is gonna grow because as we go through time, that house that was $400,000 when you bought it, 10 years from now is probably gonna be worth $550,000. So that house is growing in equity, you're cutting down your mortgage, and now you've made even more money. So I would look at it that way more so than cash flow. Cash flow is tough right now, and it's really one of the things that's been stopping me from buying houses. And my goal, remember I was saying that I set a goal, and my goal is to buy a house every single year for the next 7 years. I got my one for this year, so next year we'll buy another one, and we'll buy another one for the next 7 years. Then I'm done with real estate, and I'll move on to something else. But I have it in my mind exactly what it is. 2.4 million. Once I hit the 2.4, that's gonna change, of course. You don't hit a goal and relax. You change the target. And that's gonna be 3.6. And you guys know what 3.6 is if you know what 2.4 is, right? It's in my mind. So that's the goal. Just keep moving. I've already hit my first one. 2.3 is the next one. and then it's keep going from there. And once you get to those last goals, and that's my time, but once you get to that last goal, or once you get tired of doing the real estate, the investing, it's time to relax. Just live out life and give it to your kids.
Appreciate that, Sean. Y'all give it up for him one more time. There's a lot of math over there. I was over there. It's like, yo, wait a minute. Let me get my calculator out. Hopefully, young people let that sink in, man. Y'all about to go talk about it? Oh, praise God. Y'all give it up for the teenagers. Yeah. Hey, everybody, let's take a 2.5-minute break, and then we'll reassemble. All righty. Was that not some good stuff, everybody? Listen, you have that full gamut, man. Like, you can go away from these 3 days, but like, we talked about everything, right? And so that's the whole point. So now we move to the part of the conversation that many of us, we hear about all the time, that it's important, but we really don't, it doesn't really hit us until we need it. And then we don't have it. So I was just in a meeting the other day with a group of pastors with a whole bunch of funeral directors. And they were just pushing us to help them. The funeral directors were helping. Because during COVID, it was a lot of deaths, wasn't it? And the tough part for us was having to deal with grieving families. And churches were seen as rude, and funeral directors, because you're grieving, but ain't nobody got no money. Who gonna bury them? You see? Why get quiet? So we gotta talk, we gotta have this insurance conversation, okay? And it's best for us to have it in the cool comforts of an air-conditioned facility, and everybody's cool, and right? And then when nobody's mad and crying, and that's my uncle. Well, your uncle ain't got no money. So the bills got to go somewhere, right? So we're going to have this conversation so we can get it right, okay? Everybody cool? All right, so coming here to present is Brother Rojan Garrett, and I'll let him come in his way. And I think Miss Jessica sent something. So, Ro, you can come on in your own way. Y'all give it up for Ro.
Thank you, thank you. Thank you, Bishop, for allowing us to have this opportunity. We're going to talk about some insurance today. All right? So let's just go, all right? So just to introduce myself, Rojan Garrett. I've been an agent for a while, since 2010, specializing in commercial, auto, home, life, retirement, member of NIA, a member of NAFA. And today, Sister Jessica helped with this presentation, but she's actually not able to be here because she's at conference with Farm Bureau. Jessica is recognized with Farm Bureau as a soaring eagle, which means she's doing great things with Farm Bureau. All right. Now I'm personally giving her the Trailblazer Award. You know why that is? When I looked on the site today, Jessica is one of 2 females for the state of Tennessee as far as agents. Y'all hear what I said? She's one of 2 females for the state of Tennessee. So I told her every time I see her, I said, girl, you, and like today I said, you can't miss, because if you miss, they're going to know you ain't there. I said, so you have to go do what you need to do. So we're going to definitely talk about some life insurance. And our plan was kind of to talk about the difference of the captive agency, which is a Farm Bureau or a State Farm, versus a independent agency like GTIA, okay? So life insurance made simple. I like this, and this presentation is usually an hour, but I'm gonna cut it down to 30 minutes, okay? Life insurance made simple. How did I really fall in love with the business of life insurance? One of my first policies was on my uncle, who, you know, if you're in life insurance, when you first get into life insurance, what they want you to do is make a top 300. You literally have to create a list of people you know who's going to buy from you, when those people know you don't know anything about what you're talking about. Like, boy, I know you just got that job 2 weeks ago. I said, just let me talk to you about these policies. And literally, so I literally had different policies to offer him. But one week we took on a guaranteed issue policy, and my uncle was in terrible health. And so he took out the policy, and it was through the Gerber Life Company, right? And what does Gerber really sell? What do people know Gerber from? Baby food. He said, boy, you trying to sell me some, what you trying to sell me? I said, it's a legitimate policy, and you need it. I remember the premium. The premium was $272 for $25,000 in guaranteed issue. He was 72 years old. But he was uninsurable, right? So one of the things with life insurance is that it's so many variables that when you watch these commercials, you really can get confused on what to buy. He took out that policy with a 2-year wait on death. He died 3 years later. So his wife, like my aunt, was like, boy, I'm so glad. I'm so glad you got on our nerves when you first got into business. Because literally, if it wasn't for that policy, because I'm going to talk about that as well, he worked all those years with a group plan. And once he retired, guess what happened to the group plan? It went away. It's no longer good, right? So let's go ahead. Let's get into it. So types of insurance. My presentation is an hour, but I ain't going to take an hour. It's 4 parts of insurance. I want you all to take notes, and I may share this slide with you. So types of insurance: term, permanent insurance. Those are the 2 main types, okay? With the landscape of life insurance now, know that with term insurance and permanent insurance, now you have an old type of life insurance where it just pays death. Nowadays, we have a new type of life insurance where it pays death with living benefits. Living benefits being critical, chronic, terminal illness, riders, where if you have cancer, end-stage renal failure, go blind, have an organ transplant, you can access your death benefit without dying. How is that different from the old term? Back in the day, the way we used to sell it, you would sell a death policy, then you would sell literally a critical illness policy. We used to call them, even with like cancer plans, for instance, cancer plans, heart attack plans, stroke plans. If you had a policy that's, let's say, cancer benefit plan, if you were diagnosed with cancer, you could literally access a portion of that policy at diagnosis. It could be $5,000, $3,000. The way it works now, and every company, there's so many companies, all the different company benefits are different. And I'm an independent agent, so I know that. So, but the basis of how the living benefits work, if we have a $500,000 policy, you're diagnosed, based on the severity of your diagnosis, you can access some of that $500,000 without dying. That's a big difference, okay? Based on the severity of your diagnosis. Stage 1 cancer pays one thing, stage 4 cancer pays a different thing, okay? The biggest difference is you can get it all in one policy, all right? So that's old versus new. Term insurance, literally, you can get it in 1 year, 5 year, 10 year, up all the way to 45 years. The older you are, the less years you qualify for. So usually by age, and it's all depending on the company, by age 85, literally, let's say age 65, you can still get a 20-year term. But usually after 85, you can no longer even not only get a term, but most term insurance runs out around 85, based on the literally if you can afford it. Quick fact with term, 99% of term policies never pay out. 99% of term insurance policies never pay out. They are designed literally for pure protection at areas in your life where the insurance companies know you're probably not going to die. 99% of term policies do not pay out. You don't have to believe me. Take notes, go home and research it. All right? So let's go on down the list. All right? So with permanent plans, you have 3 basic types: universal, whole, variable. I'm going to start with whole because it's the simplest permanent plan. Literally, if you take out a whole life policy, you pay $50 at start. At the end of your life, they mature at age 100, you're still paying $50. That's the basic of a whole life plan. A lot of people like whole life because it's simple, okay? Universal life, and this is the big one that's getting all this traction with IULs and all of that, right? Universal life is a flexible premium policy that you can adjust along the lifespan of the policy, of the contract, all right? Quick story, back in the 80s, universal life policies, literally the interest rates in the 80s were high. So a lot of agents were selling universal life policies at the minimum amount, okay? With universal, you have minimum, then you have literally what they call modal or average, then you have what they call target. Well, a lot of agents were selling them at minimum premium, literally just you're able to get a policy in there, people are able to get insurance, but that insurance wasn't paying enough to keep those policies in force, so they imploded years later, okay? So with universal life policies, the relationship with the agent is very, very, very important. You want to make sure you do business with people you see. If some man show up on your doorstep selling you life insurance and you ain't never seen him, I wouldn't buy from him. And y'all know what I'm talking about. Mr. Green always coming over here getting that premium, right? You literally have to be careful, especially with universal life policies, because those policies are so flexible. An agent will sell you this insurance just to qualify for a trip. Believe what I'm saying? Where you should be paying $200, but he know Miss Sally ain't paying $200. But I can get this policy in here for $50. And you pay $50 for 20 years and then realize when Miss Sally's 80, she can no longer afford any more insurance, and she's realizing now that her policy has imploded. They're sending you a letter saying your policy is going to lapse because you haven't paid in enough. You have to be careful with universal life policies. The IUL thing as well, because it's the same, it's literally the same policy. The difference with an IUL is that the interest rate is based on indices like the S&P 500. Okay, one of the selling points now for IULs is that it has a zero down floor. So that means literally, if the interest rate of the S&P is going up, let's say 20%, and let's say we have what they call a participation rate inside of the IUL, that policy will participate in some of that 20% gain. If the S&P goes down, the IUL policy will do what they call have a zero floor. You will not lose anything in your policy. That comes with a challenge as well, because that sounds too good to be true, right? So in the back end of an IUL, you have fees, and usually those fees run for like 19 years. And with those fees, you have things called like internal rate of return. You have all these administrative fees. You have things that's really going to eat up the interest that you quote unquote, didn't lose. Okay, so with IULs, you still have to fund those policies at an adequate amount where they will never run out. Okay, because of the fees, and they get really kind of complicated with those type of policies. I tell anyone, if the thing about IUL policies, especially with agents, is that if an agent is really making money off of IUL, they're not selling it correctly. If an agent is making money off of an IUL, they're really not selling it correctly. Because IULs correctly should be overfunded all of the time. And when you overfund a policy, the agent's commission goes down. And a lot of agents don't want to waste their time, right? So they look at it a little different. So just know that those type of policies should gain. Listen, with me and for my clients here at the church, they could tell you, if you don't see cash value year one, I didn't set it up right. Cash value year one. Not year 5, not year 10. If they set it up correctly, you should see cash value year 1. Most agents, prime example, if a policy, let's just give you an example. If a policy costs $2,000, let's say the target premium is $2,000. Let's say you as the client told me, Rajon, I could pay $2,000 for that policy. I said, okay. If once you give me that $2,000 number, I can do one or two things. I can design a policy where the $2,000 is the target, which controls my commission, or I can design that policy where the $2,000 is the most I can actually put into a life insurance policy and prevent what they call a modified endowment contract, which is a MEC, which is an IRS thing, just saying literally that this still is a life insurance policy, okay? If the agent's not doing that, and if they're making that $2,000 target, they're just making as much money as they can off of you. But if they're literally taking that $2,000 and hitting at the MEC limit, at that point, they're doing as much they can to give you as much cash value. All right, that's enough of that, because that's a little advanced. I'm getting in the weeds a little bit on that. So also involved with a life insurance policy, you have roles play, okay? A lot of people think that insured is just one role, but actually you have insured, owner, and payer, okay? The insured is the person that is insured with the life insurance policy. The owner is the one who actually controls the life insurance policy. So if grandmama takes out a policy on the grandchild, grandmama owns the policy. She makes the decision. Grandmom's the one who not only makes a decision on what happens with the policy as far as the beneficiary and things of that nature, she also makes a decision on how that's going to be paid out, you know, if she wants to make any type of changes throughout that policy, okay? And you have the primary beneficiary, who is the one who's getting paid first, then contingent, who is, some people call it secondary beneficiary, okay? All right, so let's go on. All right, ways to obtain coverage. Now this one, I love this. So how many people have life insurance on the job? All right, so employment life insurance, when I do consultations, I never count that at all. Group term, I never count it. Why? May not stay there. And what are you losing with group term policy? All right. What else are you losing with group term? Huh? Ownership. That's one. What's another thing you're losing? You're losing your age. Because life insurance is purchased, age is one of the biggest factors as far as price. You're losing your age, and sometimes you're losing your health, your insurability, okay? If you're a veteran, you have ways of obtaining insurance that other folks just don't have. So you have Vet Life, which is a new guaranteed issue product through the government, and you have VGLI, which is Veterans Group Life Insurance. Then you have the SGLI, which is the Service Members Group Life Insurance for veterans. And so if you're on service-connected veteran, you get certain benefits that other people they just don't have access to. So if we have any vets in the house, just know that you do have ways of obtaining life insurance that others don't. Another one is associations, and this is one sometimes people overlook. So if you're in AARP, if you're in a trade association, education, fraternity, or even banks, the thing with banks, just make sure it is a life insurance policy and not an accidental death policy. But if you're in any type of association, you sometimes will get access to group life insurance. So that is an option for you. My personal favorite, of course, is private, individually owned coverage. You own it. You control it from the beginning to the end. That's another thing about that you all said about group life that's true. With that life insurance, you do not own that policy. Your employer could cut off the life plan next year. And again, you lost all of those benefits. Just know that most employers get a tax break up to $50,000 to provide free life insurance to you. Okay? So just know that. So, but some, when it comes to, 50,000 is okay, is an okay number, but for most households, you need a little bit more than that for income replacement, things of that nature, okay? So that's why most employers, when it comes to supplementing things of that nature, they're going to charge you a price for that. Most group term is going to be sold at 5-year increments as far as a group term policy, okay? So just know that in the future. So one part of private that I love is the term conversion. How many of you all have heard of term conversion? 1, 2, 3. All right. So this is a big one. Term conversion literally means that if you have a term policy now, you have to check with your company. You can convert that term to a permanent plan, usually without proof of insurability, meaning that if your health has failed, you still can get a permanent plan because right now you have a term. That's very important, very important. When I got into the business, probably my first 6 or 9 months, all I did for American General was process term conversions. I just went through my book of business and said, who on this street or in this neighborhood has a term policy? When was the last time they saw an agent? And I literally, for 6 to 9 months, just processed term conversions because those people gotten older, their health was, decreased. So at this point, this was a great time to, put them a plan in place that was going to stay. Okay. All right. So let's go on. All right. Next is underwriting class. Now, with underwriting class, this is a big part of what or how much you're actually going to pay for life insurance. Okay. Full, simplified, and guaranteed. Full literally meaning it's a fully underwritten. That they're literally going to ask you every question. They're going to call everybody. Everybody. They're going to dig deep to underwrite your risk. So if you're saying you're a non-smoker, they're going to go on Facebook. And they're going to see, oh, he's smoking cigars on that picture. Okay. Let me call the agent. Why is he smoking cigars on his Facebook picture? That's what they're going to do. And literally, it gets that deep, especially the higher, Raymond. If you want that $2 million policy you told me about, they're gonna search your Facebook. they're gonna search your Facebook. They're gonna dig deep, right? So the one thing about fully underwritten policies, like it says on the screen, they are the cheapest you can get as far as a permanent plan because they dig deep. Simplified issue, they're gonna ask you some questions. It's in middle ground as far as price. And then guaranteed issue, there's no health questions. None at all. AIDS, cancer, organ transplant, anything wrong with you, literally no health questions at all. Those policies usually have a 2-year wait on death. So if you were to die within the first 2 years, your family will get paid a percentage of the premiums paid, the premium they will get paid the premiums paid for the policy plus a percentage. Every company is different on the percentage. There's some companies that pay back 5%. There's some companies that pay back 15%. Just depends on the company you go with there. Okay, but underwriting class, remember, is very important. All right, so let's get to premium rate calculation. This one, again, is very important. So when it comes to premiums, females are always going to be lower than males. So the insurance company has already calculated that men are going to die first. They already know. Seriously. Like the numbers are there. Insurance is based off the law of large numbers. They have so much data they can tell you based off of if a 70-year-old man, 70-year-old woman standing beside each other, they're going to bet probably 90% of the time that man's going to die first. All right, because men are we're just terrible, I guess. Smoking status, non-smokers, lower than a smoker. Health status, my rule for medication is simple. And agents, I know we got some agents in here. I tell agents this: if 4 medications or more than likely, it's not going to have a standard rate. You're going to get literally a rating. So if you see on the screen, I don't have it there. I thought it did. Yeah, it's actually on the underwriting class. With rating systems, with fully underwritten policies, you have what they call a rating system between A all the way to letter P, okay? If you get rated, all that means is that your premium is going to go up a little bit. But you can also get a preferred rating, which means if you're at a standard level, if you're in really good health, you work out all the time, you eat the right things, you can get a lower rate than the average person. That only happens really on fully underwritten policies. Simplified issue has a rating, but it only goes up 4 rating scales. It usually doesn't give you a better rate. You usually get a rating up to table 4 or table D, okay? Guaranteed issue doesn't have a rating system because there are no health questions. And getting back to premium calculation, age, of course, I think we all know that. The older you are, the more premium you're going to pay. Okay? And one that a lot of people don't know about is lifestyle. Especially for your higher value life insurance policies. If you go to prison, if you have a criminal record, prison, if you do extreme sports, if you have a terrible driving record, you can be declined for life insurance. Why? Why do you think that is? Risk. Risk. All right? So I'm at my last slide here. So let's go ahead and talk about some things. Common marketing strategies revealed. Now, this is like, this gets, a little weird sometimes, but some people will come up to me and say, man, I need a burial policy. I need a burial. Let me give y'all a little history on burial policies, industrial policies. The company I started with, American General, at one time, they wouldn't sell black folks more than $500 in burial insurance. I've had to process some of those policies, believe it or not. I had a lady, she took out a policy. At the time, it was called Life and Casualty. If you go downtown and you see L&C Towers, that's Life and Casualty. And y'all remember Life and Casualty, man? Well, that's American General too. That's all the same company. If you know about country music, WSM Radio, they own that radio station. WSM actually stands for We Shield Millions. We Shield Millions. That was Life and Casualty's slogan back then. Well, I actually had a lady at a former church. She had 6 of those $500 industrial burial policies. And what does that total? $3,000. Guess how much she had paid for all them policies? $7,200. $7,200 is what she had paid for those policies. And do you think they were going to call her and say, you probably need to cancel these policies? They had made so much money. At one time, we were not even allowed to buy high value. So that's why I use those words. Low death benefit, 25, 50, I understand that if you're planning, but proper planning with life insurance is, for one thing, you don't have to have one policy. Please understand, life insurance is one of the easiest ways to pass money tax-free to your heirs. Listen, I love real estate. I love it all. $1 million death benefit was going to go to my son no matter what I do when it comes to my business. Get what I'm saying? If you got a $5 million policy and you die, $5 million passes on to your heirs tax-free. Have you tried to pass on $5 million assets for a business to your heirs? First of all, they probably don't even want to do what you're doing. So, more than likely, they don't want to, But that's the power of life insurance, okay? Pre-need. How many people have heard of pre-need policies? Y'all haven't heard of pre-need? You ain't heard of pre-need? All right. So a pre-need contract simply is a contract agreement to stabilize funeral expense with a funeral home of your choice. You go in, right now if a casket is $4,000, I'm gonna have this policy agreement. Usually it's a 1 year to 5 year agreement that this casket is gonna maintain its price at $5,000 even if I die in 30 years. I'm still gonna get this light kind casket in 30 years. What's the problem with that? And we recording, but still. You can cut this part out. I'm gonna tell the truth on what's wrong with this. What's wrong with this part? Monica, in 30 years, let's make an agreement now. In 30 years, you're going to sell me a $5,000 casket. $5,000 casket same kind, same lightness, in 30 years, you're going to sell that to me. What's the problem with that agreement? Exactly. So what if I made this agreement with you and you don't left town? When Monica said, when my grandmama died, she said, how many conversations have you heard like that? But Mama them said that, now Mr. Bill, you supposed to bury Mama. Mr. Bill dead. Mr. Bill's been dead. Like who's controlling it, right? There are a lot. So one thing I tell people, and I have a funeral home in my family, so I'm not biased against pre-need policies, but what I'm saying is the life insurance policy is a way better contract because the beneficiary of your policy controls how that money is going to be paid, not the funeral home. Most pre-need policies sold by funeral homes, more than likely the funeral home is the beneficiary. In the state of Tennessee, that's actually illegal now. So funeral homes cannot make themselves beneficiaries. If you know a funeral home, if you have a contract with a funeral home where they're the beneficiary, that is an illegal contract. If you have a contract with a funeral director and they put their name as the beneficiary, that is illegal. That is illegal in Tennessee. That is illegal, okay? So next one, mortgage protection. This is one, you hear a lot about mortgage protection. A traditional mortgage protection policy, if you have a mortgage for 30 years for a $250,000 property, some agents will sell you a $250,000 term for that property. That's all it is. It's just a term policy. Now, back in the day, there was a thing. Now, some companies still sell it. It's actually a decreasing term policy, believe it or not. So this policy will run, you have literally 250. By the time those 30 years are up, you literally have zero. And what kind of contract is that? Terrible. Never want to take something out like that. So burial policy, infinite banking concept, and child protection plan. I actually can touch these together. These are literally just high cash value life insurance strategies to overfund. The IBC or infinite bank strategies is something that's really taken off as far as a concept. And it's a concept that I subscribe to, and the child protection plan is a concept I subscribe to. But both of those strategies literally is where you can take cash value out of your policy and pay literally for a lot of the high expenses in your life when it comes to education, down payment for a home, and set up a retirement in later years using one policy. But you have to strategize from the beginning. You have to plan for that from the beginning. And that's, literally life insurance. We got any questions? Mm-hmm.
I've heard before, like when you're doing the life insurance and the beneficiary, is it better to, I know you can name whoever you want, but I've heard that it's better to put the beneficiary as like a trust.
Mm-hmm.
Just in case, I don't know, whomever passed away, if they owed something, no one could come in and get it if it's in a trust. Is that true?
Yeah, I mean, if you put it in trust, the trust usually has someone who's going to control the trust as far as an attorney, and they're going to divvy out the funds. So simple as that. Especially if you don't have an individual to leave it to. I never make children your beneficiary. Why is that? Right. They can't touch until 18, so your death benefit will be locked up in probate until they're 18 years old. All right? What other questions?
So I have a new business partner, and we talked about after we start making money to get
Key person insurance, right?
So we don't know, we just are Googling at this point to figure out what to do and how much, we don't know how much should you get on the other person, and how do you go about it?
Key person insurance is the basic way to calculate that is how much would it cost to replace that person? From a search, from a salary, all of the above. You know what I'm saying? How much would it cost to replace that key person in your business? So that's literally the basic way of going about it. Yep, to figuring that out. Go ahead.
Can the key person
Usually the key person don't take out a policy on the business owner. It's usually the opposite way.
I'm saying, like me,
Would the key person take out the policy themselves?
yeah,
No.
okay.
No, the business owner or business partners, the business would be the one to take out that policy on whoever the owners are. Literally, they would pay the premium. Yeah, the actual individual definitely shouldn't take that out, shouldn't bear that expense. Because what you're looking at is when that business, if a key person in that business dies, you have to find a way to replace their talent. Simple as that. Any other questions?
So I used to work at Northwestern Mutual.
Mm-hmm.
One question I have for you is, and this is your company that you're running,
Right.
This is your, how hard is it? This is what I found frustrating at Northwestern Mutual. How hard is it to have conversations with people about insurance policies, especially in the Black community?
Now, honestly, in the Black community has been, to me, what I've noticed is that the Black community has been nurtured and almost trained to have those conversations about life insurance. You know why? Because back in the day, Mr. Johnson, the insurance man, used to walk through the neighborhood, talking to everybody. Y'all know what I'm talking about? He used to walk through the neighborhood talking to everybody. So kitchen table conversations is actually how I started. I found it easy. I'm a church guy, so most of my clients from the time I've started have come out of church, and church folk go to funerals, so. You know what I'm saying? Like, for real. Like, you know, so having those conversations to me, it's not that difficult. The difficult conversations is when we start talking about high value policies. Instead of the $50,000 or $25,000 policy, no, you need to take out $500,000. You need to take out $2.5 million. Oh man, I ain't leaving them all that money. Man, you must be crazy. I ain't leaving my man. She gonna run off. You gonna be dead, bro. I ain't giving that man all that money. I'm serious. That's what I hear most of them. Man, $1 million? No, I ain't doing, no, bro, I ain't doing that. Not $1 million. That's about 50,000. That's enough. I ain't leaving them all that money. So it's our mindset.
Well, and that's the reason why I was asking. 'Cause
Yeah.
I went to Brooklyn and I was knocking on doors trying to talk to people, and that was the hard part about it. It was exactly that.
Yeah.
Like, I'm not giving them that money. I had to work for this money.
Yeah.
They got to work for this money.
Listen, let me tell you something. Life insurance, y'all listen to what I'm saying. If you want to know if somebody loves you, ask them to pull out the life insurance policy. You can't eat it, you can't drink it, you can't smoke it, you can't watch it. All you know, especially the spouses, the married couples in here, all you know is that it's a contract over there that when you die, they're gonna be saying good, maybe, if you did what you were supposed to do, if you set it up the right way. If you don't have a life insurance policy, you got to think about that. How do you want your spouse, your kids, how do you want their quality of life to be after you're gone? That's what the life insurance is probably the biggest love letter you could write to anybody that you actually truly love. Because you can't do nothing with that money. And one other suggestion, if you're older and you want to take out a policy, you can't afford it, I always suggest have your children pay for it. I'm a big proponent of that. If you're a senior and you want to leave your kids something, and you just have a straight conversation with them, babe, I want to leave y'all something, but I just can't afford it. Y'all can pay for it because y'all going to be the beneficiary of this. Pay for it. That, to me, is one of the biggest, that's something I use all of the time. Because most seniors can't afford it. Whoever your kids are, now if they worth something, y'all know what I'm talking about. if they worth something. if they're worth something, have them pay for it, literally. You know, because I'm telling you, life insurance is definitely one, to me. Now, GTIA, my agency, we do everything, right? But life insurance is my favorite line of business because at the end of the day, no matter what your home insurance, your auto insurance, all of that really doesn't matter. One of the worst feelings is when your neighbor, when the breadwinner dies and you look across the street and a U-Haul truck jumps up, it pulls up. And now their stuff is coming out of the house. And you know, well, man, I thought they had life insurance. No. All right. Thank you all.
Appreciate it, Ro. Listen, I wanted to do this. We have several other people who are in the insurance industry. Sister Lindsay, Pastor Jay, and what's the name? Pastor Jay, come tell everybody what you do. Lindsay, y'all come up and just tell everybody the name of your business and what it is you guys do as well. Because I want us all to have options. We got options as far as real estate. We got options as far as insurance, and want you guys to come and y'all come get this free advertisement.
Hello. I am Lindsay Lee. My husband Michael and I are also in the life insurance industry, working underneath the umbrella of the Lee Collective LLC, offering more than just life insurance policies. I'm also a licensed health agent in the state of Tennessee, California, Texas, adding Arizona soon. We offer virtual support to small business owners, notary public services, a couple of things happening. So that is what we do, but everything that you said was absolutely spot on. And the last thing we want to see is anybody in Zion frying fish, passing a hat, doing all them other things. And your family is trying to figure out, how are we going to take care of you? They can't grieve properly because they can't afford to bury you. They're worried about, do we have enough Tony Chachere's and hot sauce to go around? So, as Bishop said, you got options. It's in the house. Amen?
Well, of course, I'm under MJ Solutions, and I do as well the life insurance and the credit repair, wills, trusts, getting those things in order because you want to make sure that your money is passed, correctly. And then what else do I do? Oh, the power of attorneys. Your power of attorney, your power of a medical attorney. You want to know who's going to pull the plug on you. Right, and so you want to have that outlined, who's going to be able to handle your money, who's going to be able to handle your affairs if you no longer can. And so you want to have those things written down, and knowing that you have the things, the will versus the trust. Will, of course, sort of gives instruction on what you want done, and the trust protects and makes sure it gets done. So you want to know the difference between those. So if you want to know any of that stuff, then come on over and see me, okay?
Are there any more insurance people in the house? Pastor Coleman, you in insurance? You want to say something about? Yeah.
I actually had a question for Rojan, but Rojan put a point on. I just want to tell everybody, if you don't have insurance, and as Sean was saying, hard to talk to our own Ebony youth people. We are afraid to talk about insurance, and that shouldn't be. It's vital, it's important, and I think we're just afraid to talk about what's to come. I'm like Rojan. The death insurance is old now. We got to get with the new ways of insurance. So if you don't have anybody, see somebody. Like Bishop said, we have a lot of people in the house that you can talk to. So I just beseech you, my brothers and sisters, talk to somebody. Because
I beseech you.
nowadays, if you look at Facebook and the news, it's not really the 70 and 80 years old that's passing. It's passing more. So, and my sister was saying, the hot sauce gonna run out, the fish sauce, GoFundMe, when you can go ahead and invest in yourself now. And I wish these teenagers were still here because we need to invest in their future and leaving a legacy for them. That's the way to go.
Awesome. Have you guys been blessed by these 3 days? Yeah. So, Pastor Jay, I think we're going to have to do something like this again. So I want y'all to put pressure on Pastor Jay. See how I throw that out? Put pressure on her that we need to get this scheduled again, because there's so much information that needs to be communicated to us. And I make this appeal, and please, please, please. We sit in rooms like this, we talk about it, and if you're getting uncomfortable now talking about death and talking about insurance, and it sounds cliche. Oh, they just up there trying to sell me a policy. They're just listen to me. I'm one of the ones that have to sit and listen to this screaming and yelling and crying, because now I've got to go eulogize somebody I don't know, right? And they're calling and they're cussing out the funeral directors because they didn't get what they wanted, and that's not what Mima wanted. And guys, it's just better to have these conversations now and plan it. So please, I really, as Pastor Coleman said, I beg you to, let's have these conversations, these tough conversations. Pull grandmama around, mama around. We ain't trying to get you out of here, mama, but let's just have this conversation, right? So that when it happens, we can celebrate you and celebrate your life, and we can go to the bank and, you see what I'm saying? So let's have these conversations and let's set it up. And the good news about it, you have people in-house that you can build relationship with, and you know them. You're going to see them every Sunday. It's going to be hard for them to worship on Sunday if they know they did you wrong. They're going to be dodging you on Sunday morning. So you have these resources, okay? From the investing conversation to the insurance. Pastor Johnson does a real good teach on the trust and the will. So those of you who want to get that stuff squared away, let the trust talk, go see her. Y'all see how all of this ties in together? It all ties in together. So we get it all right. So now we're empowered Sunday to Sunday to come in here and worship. And now we go to a church that's not only spiritually in tune, but man, we got our money right. You see what I'm saying? We've got our money right. And we can start making huge changes in our communities and be able to make moves, like boss moves, as a body of believers, because we're paying them taxes, we're making money, we've got tax benefits, we all got insurance. Oh, wait. Y'all see what moves we can make? And we're entrepreneurs. And that's where we want to be. So I thank you all for sitting. There is no Friday night session. So we've had 3 nights, and those of you who have been streaming in and you're catching the playback, thank you so much for being attentive. I think we're going to have to do something like that. We're going to have to do a part 2. So be on the lookout, and we'll put some more topics in there. We'll probably hit some of the same things, but we want to make sure we're providing you with the resources that you need. And I don't want you to feel like you have to go outside of Zion to find resources if we have them. Okay, so if we have them and we have the professionals here, we're going to expose you to them. All right. Anybody have any questions tonight? Any other questions? None? Now, I'm going to say this. Once you get all your budgets right, and once you get all your budgets right, once you get all your budgets right, you get your business set up, you got your taxes going to where they need to go, you're an entrepreneur, you got all that flowing, you're going to have to learn how to tithe. Okay? I don't know, as we were all sitting here talking about all of this, the major millionaires give. That needs to be in the fabric of your financial structure. It all works together. She just told you the other day, you can write it off. Don't let the write-off be your motive. Let being obedient to God's word be your motive. But it all works together. Y'all feel what I'm saying? It all works together. So as we are having these conversations, make tithing and giving and sowing a part of your financial structure. Okay? You can research it. Even the folks that don't even go to church tithe. Even the millionaires that don't even call themselves churchgoers, they learned a principle. And so tithing is a principle. The giving, the tenth, it is a principle. Whether you're saved or not, the principle still works. So a lot of times in churches, it's us, the churchgoers, who don't operate in the principle and don't reap the benefits. So just thought I'd drop that in there. So I can see that now that we're in this financial vein, I can see that becoming part of our part two, is building a biblical foundation on how to structure our finances to where we include as top priority the 10th. And you'll see, now that's one of the few promises in the Bible that God has said, try me on. Test me on this. See when I open up the windows of heaven. And so I think that's going to be part of our next session. All right. Hey, I told you we wouldn't do the benediction until the last night, so we're going to do our benediction. We're going to ask everyone to stand. And our presenters are here, so in case you want to ask some additional questions, you can go meet them there. Let us pray. Father, what a privilege we've had to share these past 3 nights. I thank you, Father, that you have resourced Zion Christian Ministries in such a way that, God, we have our own professionals. We have people of insight and wisdom in so many different areas. Lord, it's a testament to what you're doing on this fertile ground. That, God, you are sending people who could equip the kingdom, God, with advancement that they could be financially free. That from the time an individual is born, God, that they know how, or that they could be assets to their family all the way until the time that individual dies. That, God, they could even leave a legacy for the next generation to come. I honor you today, God. That, God, you saw fit to bring us for 3 days to teach us how to steward what you have given us well. And I pray that something has been said over the past 3 days that would impact and empower someone to go be better in their finances. And it's to this end, God, that we give your name the glory, the honor, and the praise. We say amen. Amen. All right. God bless you, everybody. Thank you so much.